IndusInd Bank declared its numbers, but the conference call happened post-market hours, and of course, brokerages also came in either late last night or today morning. Sharad has been scanning through what new came out of the Concall as well as what are the latest as far as brokerages on IndusInd is concerned.
Well, yes, in focus we are having IndusInd Bank, and there were important Concall takeaways which we'll discuss, and the management is targeting almost 18 to 20% loan growth in FY24, and do remember the earlier guidance was between 20 to 25%. Apart from this, we look at a 20% CAGR in the loan growth over the next 3 to 5 years. And NIMs are expected to come in the range between 4.25 to 4.35% versus the earlier guidance of 4.15% to 4.25%. Now, the bank expects to deliver a return on assets of 1.9 to 2.2%, while the ratio of PPO versus assets is expected to come in between 5.25 to 5.75% against the 5.7% current numbers. Now, apart from this, also the used commercial vehicle and the affordable housing finance will be the likely key growth drivers going ahead for the bank, and also they're expecting that the home loan book will expand and go up to almost 15,000 crore rupees, and of course the affluent banking segment, that is expected to double. But now let's look at what the brokerage has been talking about. And firstly, Macquarie has maintained an outperform rating with a target price of 1,510 rupees per share. They have stated that the price to book value of almost FY25 at 1.2 times looks at a long-term attractive levels. Apart from this, also JP Morgan has stated that a strong growth has been there in the earnings, but the asset quality has actually slipped, and the bank is expecting slippages to moderate in the first quarter, which would be onwards to the less of the 2% mark. And lastly, DAM Capital is there, where they have maintained a buy rating with a target price of 1,510 rupees per share.
Okay, so the stock had slipped a bit yesterday. Perhaps the reason was the gross slippages coming in higher than what the street expected. Maybe we'll see a bit of reversal today. In fact, on that note, let's listen into the management as well of IndusInd Bank.
Indian economy remains a bright spot in otherwise weak global economic outlook. Overall, for the full year, credit growth accelerated across the board to 15% from 9.6% in financial year 22, outpacing deposit growth of 9.6% with incremental CD ratio rising over 100%. Amidst the bank failures in the US, the Indian banking system remains sound and healthy, with strong capital and liquidity positions, improving asset quality, better provision coverage, along with improved profitability. Coming to the bank-specific development, our execution in PC5 and for the quarter has been in line with our communications during the year. Deposits had healthy momentum. Overall deposit growth was 15% year-on-year and 3% quarter-on-quarter. The retail deposit momentum continued with 4% quarter-on-quarter growth, with 43% of the deposit coming as per Basel III LCR norms in retail.
All right, that's IndusInd Bank for you. We'll keep a close eye on that stock.